So some scary headlines this week, some surprising data. As fate would have it, we had the return of our quarterly event. We're going to share some of our key insights from tonight. The big headlines this week around inflation, the Fed, more recession fears. We had our quarterly event tonight here in Spokane, and we had Torsten Slok, chief economist of Apollo Funds, here to speak. Seemed to be one of our more popular events.
It was great.
Feedback's been tremendous. Wanted to share with you some of his key insights and thoughts. We'll start with inflation. Huge prints this week. 9% on the consumer price index, double digits on the producer price index. And of course, it's natural to feel, we've talked about the recency bias so much of lately, it's just going to continue on indefinitely. So we posed that question to Torsten tonight. What do you see? Of course, nobody would pretend to be able to predict things perfectly, but if you look at the data point, it's about what has been. What's recently been going on that he shared again, commodity index, 18 of the 19 subcomponents coming down. Rents actually starting to abate. Monetary supply beginning to slow its expansion. All of which he feels should, sooner rather than later, begin to pull that inflation down. What other points tonight stood out for you?
Yeah, we talked a lot about, obviously, the recession, the scary R word. And as he stated, it's not only that he feels, as most of us have been talking about for a while, that it's going to be a soft landing, but we also have multiple sectors of the economy that are holding up really well. The banking sector is holding up extremely well. All of those regulations that were put in place coming out of the global financial crisis are things that bankers were not very happy about at the time. They're very happy for them now. A couple of weeks ago, when the big banks, the 35 largest banks, went through those most recent stress tests, all of them passed with flying colors. The housing market is staying very propped up with individuals who own their homes with not only very low fixed interest rates, but a lot of equity in the homes. And even though, as we do see inflation hopefully coming down as the economy slows, we're certainly going to see unemployment going up. But at the same time, the labor market is still really strong. So those are some of the things that I saw that were really important that our clients loved hearing tonight.
Yeah, consumer balance sheets are strong, corporate balance sheets are strong. Torsten made the comment, if you were ever going to get aggressive, number one, talked about the importance of getting inflation down, even to keep our credibility abroad,
Sure.
The treasury market, the government's ability to fund itself under control. But that because of the strength that actually is there, doesn't often make the news, this might be the perfect time to take our medicine and get things back under control.
Yeah.
Any other key things stood out for you tonight?
Yeah, I mean, obviously we talked a lot about the Fed, a lot about inflation, but the real takeaway that I got was, sure, we're going to continue to see some volatility more than likely in the short term, but that doesn't mean there isn't things we can't take advantage of now. We don't need to flee to cash. We don't need to sell out and make those bad decisions that often come with the irrational brain. And this should not look like any other pullback that we've seen in recent or long-term history. We will come out on the other side of this if we stay the course now and start looking at how we can take advantage of these disconnects.
Yeah, he talks a lot about how, again, people want to wait for the sign, the all clear, and just how quickly things snap back before a lot of times that good news comes out. The other thing we talked about tonight is, again, people throw around the R word, recession, as though it's only one thing, when in fact, again, there's many different types. There's the technical, 2 negative quarters, and then there's the tyrannical, the 2008s. And not everything is that tyrannical version. If you look, not just grab averages, but if you look at what it's, okay, inflation's likely to abate, there's some real underlying strength from labor to balance sheets within the economy, and assume, okay, this might be more of the typical type recession. The average drawdown is 23%, which is just about where the market was. So are there issues today? Certainly. Have we gone through some tough times? We know that. But it's about where we're headed here. And there's a lot of evidence to suggest, contrary to what you're going to see in your headline news tonight, that there are a lot of reasons to be optimistic. Any last points?
No, I mean, we just came off a 148-month bull run. It's not surprising that the market takes some time to reset. This too shall pass. It's great, just like we're coming out of COVID and getting back to these beautiful quarterly events that we're doing. The markets themselves will reset as well. We'll come out on the other side, and we'll look for that, strength and resilience that we've always had before.
Yeah. We don't have time to get into tonight, but I know one of the things is a lot of times people think, oh, it's either cash or the stock market. Yeah. Tonight we discussed, Jake and I touched on alternatives a couple weeks ago in the commentary. Lots of different ways to, again, protect yourself, but still get things moving in the right direction vis-a-vis inflation, which is always there, even if it's not at 9%.
Yeah.
With that, thank you so much.